Hello and welcome to Market Domination. I'm Josh Lipton, live from our New York headquarters. There's less than an hour to go until the closing bell, and markets churning higher here. Tech leading the way as the AI trade recovers a bit today. Just taking a look at the major averages. We've got green across the screen. Dow's up more than 300 points. S&P 500, your broad gauge, it's up about 0.7%. And your tech-heavy NASDAQ, it's rallying about 1%. Well, trade-sensitive stocks like automakers, apparel retailers, and furniture companies, they're popping after President Trump's lawyers, they face tough questions from the Supreme Court justices at today's hearing around Trump's use of emergency powers to impose tariffs.
It doesn't say regulate tariffs, it says regulate importations and exportations. So why should we think that it's natural then to think that regulate importation includes taxing importations?
I specifically want to talk about the reciprocal tariffs. These are imposed on, these are kind of across the board. Is it your contention that every country needed to be tariffed because of threats to the defense and industrial base? Spain, France.
Joining me now with his big takeaways, we've got Yahoo Finance Washington correspondent Ben Werschkul. Ben, my friend, what was your read on that hearing?
Yeah, it was definitely my main takeaway was this skeptical questioning you mentioned at the top. We knew it was going to be coming from the court's three justices appointed by Democrats, and they delivered for certain. You saw Sonia Sotomayor there. But it's the three of the conservative justices that offered really pointed questions as well that I think has upended expectations a little bit here. Perhaps the most, so the three we heard from with critical questions were Chief Justice John Roberts and Justices Neil Gorsuch and Amy Coney Barrett, who you also saw there. Perhaps one of the most pointed parts came from John Roberts over the issue of tariffs and taxes. What the Trump administration's case was a kind of legalistic argument that the tariffs Trump's imposed, just his blanket tariffs, shouldn't be thought of as primarily about taxes. They even make the case that the revenues, which bring in about tens of billions of dollars every month now, are kind of a knock-on effect to what Trump's overall agenda here is. Roberts was having very little of that, and he pushed back on that, talked about sort of, for whatever reason Trump would impose tariffs, the actual thing he's doing here is taxes, and Roberts went out of his way to say taxes on Americans as well. So that was a real challenge to Trump's overall case here. Gorsuch and Coney Barrett had their own questions on other kind of pillars of the argument here too. What's striking about this as well is not just how much trouble the government's lawyer here, it was the Solicitor General arguing, but how much with these justices, but also kind of in a way with Trump himself. Trump himself would definitely not agree that the revenue from his tariffs are, quote, incidental, which is what the lawyer said today. I don't need to tell anyone that Trump talks nearly every day about how important revenue from his tariffs are to his overall bottom line. He's talked about the big money coming in, specifically from these blanket tariffs that are in effect. He even had a line this afternoon in Miami kind of about the money coming into our country and how important it is. The bottom line overall here is that there really has been a market shift here in the expectations. We won't get this decision for a while, but the sense is that Trump's tariff, this part of his tariff agenda, his blanket tariffs, are facing a real challenge here from the courts, more than we expected this morning for certain. And
Ben, when you say we might not get this decision for a while, what could a while possibly mean, Ben? What's a timeline here?
For sure. This is on an expedited time frame from the Supreme Court, but this is Supreme Court time, which is slower than most things coming in here. They've talked about it happening quickly, and they're gonna move quickly. That could mean the end of the year. Most likely, I think the expectation here is early next year, but that's definitely quicker than the Supreme Court generally comes in, which takes about 6 months between what we saw today, which is the arguments, and then the final decision being ruled. So they're trying to move quickly here. I think it'll be weeks at a minimum, maybe a couple months, but on the sooner side. The math here overall is this 6-3 court, the question being whether these three liberal justices who are very clear about how they're gonna vote, whether they can bring in any of two of these conservative justices to make it 6-3 against Trump's tariffs. You know, each of these conservative justices had different reasons for being skeptical, so we'll see what a kind of final decision is here. But there's clearly going to be a big debate going on in the court around the future of this aspect of Trump's tariffs for certain.
All right, Ben, thank you. Appreciate it. Well, stocks rebounding from Tuesday's sell-off, fueled by better-than-expected private payrolls data. ADP reporting 42,000 jobs added in October. That was a marked turnaround from September's revised decline of 29,000. Still, with the surprisingly positive report, Fed Governor Stephen Miron points to the labor market as a bigger risk than inflation in his conversation with Yahoo Finance this morning.
I'm more sanguine on the inflation outlook than a lot of my colleagues are, in particular because I don't view tariffs as driving a material amount of inflation. I think policy is too restrictive and that we're too far above where neutral rates would be. And given the state of the labor market, I think that continuing to run policy that restrictive is to also run unnecessary risks.
Joining me now with his take on current Fed policy, we got Brad Conger, Hurdle Callahan Chief Investment Officer. Brad, great to see you, especially on set. Let's start there, because Stephen Miron talking to Yahoo Finance today, but I'm interested to get your take, Brad. You look ahead to that Fed meeting in December. Will they cut? Should they cut, Brad?
I think the data is moving in their way, and here's why. The announcements we've seen on layoffs from Starbucks, the big tech companies, Cisco, Microsoft recently, UPS, tens of thousands. I think that's going to flow through to numbers. Whether the government records those numbers or not will be the open question. But I think it's trending for a cut.
So it's trending for a cut, but we heard from Jay Powell, and you heard that was kind of the headline at that presser when he says, hey, December cut, no sure thing, far from it. Let's say you didn't get the cut, Brad. I'm curious, just hypothetically, you didn't get the cut, you got a pause. I'm interested what you think the market reaction would be to that.
It depends on the messaging that he gives around that pause. Is it a bullish pause? Is it a hawkish pause or not? I think Powell's comments last week were just, I need the market to reset to 50-50 and let the data guide them to the conclusion we're coming to because we're looking at the same data you are.
Let me switch to another big theme in the markets, and that's these new concerns, or at least new questions about AI valuations. And I'm curious how you're thinking through that.
So we're cautious, and I'll tell you why. It seems like this is a sector where there are a lot of unresolved questions about what business models are going to work, how much people are going to pay, where the compute is going to happen, and the valuations are suggesting that it's a clear path to trillions of dollars of revenue. I'm not saying that's not going to happen. I'm just saying that it's more likely that we get an air pocket at some point because of DeepSeek, or because ChatGPT 6 doesn't have the same uplift in efficacy as we've seen. In other words, the models start to roll over in terms of effectiveness.
So you're broadly cautious, Brad. I'm just curious, how does that translate into investment implications? Like, does that mean, hey, I just want to avoid this AI trade, take those Mag 7 names, rip them out of my portfolio? What does it mean?
Well, we're underweight. What does that mean? So if the Mag 7 plus the AI-related names are 40% of the market in our portfolios, they're more like 28, 27. So in our world, that is a relatively big bet against those. No one's going to zero these things out, right? That's crazy.
If you're underweight there, where do you want to be overweight? Where's the opportunity?
We like Europe, based on valuation.
You still like Europe?
Yes.
I've heard people pat on the table on Europe, still attractively valued.
It's the gap between the U.S. and the European valuations is extreme. And we're not saying that Europe merits a U.S. type valuation, but it's wider than normal by orders of magnitude. So if just a little bit goes right in Europe, and the earnings are coming out really nice. We had a great season in the US. Europe is equally having a great earnings season. And so I think Europe has stopped getting worse, and that's the good news.
Brad, I want to get you out on this. Supreme Court now, our esteemed justices, they're weighing the legality of those Trump tariffs. Interesting, as our correspondent Ben Werschkul was pointing out, even the conservative justices perhaps sounding skeptical. And I'm just curious, as an investor, how are you trying to think through that?
So it's almost like what I'd prefer is they're struck down. But what I think will happen is because there's more chaos on the strike down side, which is Trump, the administration, is going to try to replace them based on other theories of
other
trade.
levers and tools.
Exactly,
for sure.
What does that create? More uncertainty. What does uncertainty do? Corporates pull back on investment. So I almost, as an investor, I want stability. I'd rather have them in place, but I think the rational thing to do is to strike them down. I personally, when I read the emergency powers, it doesn't have the authorization. So.
All right, we'll see if our Supreme Court justice agree with you, Brad. We'll find out. Thank you, sir. Great having you.
Enjoyed it. Thanks.
Coming up, we hear from Scott's Miracle-Gro CEO on the company's latest results. Don't go anywhere. Scott's Miracle-Gro reporting a decrease in net sales, but the lawn and garden products company is seeing a narrow fourth quarter loss and its cost reduction plan leading to savings with the help of AI. Here with more on the consumer demand landscape, we welcome in Scott's Miracle-Gro company chairman and CEO. That would be Jim Hagedorn. Jim, always great to see you on set. So listen,
I can't believe this.
I know. I saw you making a beeline for that prompter. So the floor is yours. You reported the stock's popping. What do you see in the business?
Well, the stock is popping because, from a depressed level, because of really good performance. That's the bottom line is, gross margins up 500 basis points, market share up, EBITDA up, leverage way down. So this is sort of the end of a recovery as we're switching to a much more offensive position as we sort of attack the marketplace. But this down thing is making me nuts. Our pot business that we're selling is down, and the analyst knew it was down. We told people that. We also had some bulk sales as we reduced inventory coming out of COVID. That was the beginning of last fiscal year. So that didn't repeat. And then we had a discontinued business in there. If you take that out, the business, our branded business is a consumer business up 3%. At retail, unit volume is up almost 10% this year. And it was about the same last year. Taking share. So the marketplace is doing great. Lawn and Garden is doing fabulous. I mean, I had dinner with the CEO of Home Depot last week. Their unit volume growth last year, plus 18%. I don't think there's another department in the entire chain that's getting those kind of results. So we are Lawn and Garden in America, and we got all the brands. And the category is doing fabulous.
So let me ask you this: when I said
margins are up, I mean it's a really good story. That's why the stock is up.
So it's a good story, but you mentioned it. Listen, it's popping today, as you said, from depressed levels. The stock's down about 20% year to date. Let me ask you: is there just a part of the story, Jim, that you think, okay, investors maybe fail to appreciate or misunderstand?
Yes.
What is that?
Lawn and Garden is a recession-resistant category. It is on fire right now.
Why is it recession resistant? That's interesting.
If you look and say, when consumers are getting all edgy and everything's too expensive and do I have enough money, am I going to stay employed? What do? Lawn and Garden and paint. Those are the categories in do-it-yourself that do really well during recession. So, I think if you look at DIY retail right now, I think they're struggling with footsteps into the store, not Lawn and Garden. Lawn and Garden, we are the biggest vendor in DIY home centers from the period called March to probably the end of June till 4th of July. We are the biggest vendor in the entire chain. This is crazy money, and we've got great brands. And so I think what's happening is, what's underappreciated with us? That we have this great consumer franchise that's recession resistant, that's doing really well now. And I think we're trading, look, if you look at our multiple, our historic multiple called 17 times, PE, we're probably down 12 or something like that right now. If you look at consumer goods in general, I think that's what's happening. But I think what you don't see in other consumer companies is the sort of brand power and sort of consumers buying their stuff. people are worried about tariffs. If you just look at a lot of the food companies, a lot of the other consumer brand companies that are struggling, we don't have any of those issues. So I think we are such an undervalued company for such a really great, very dominant consumer brand in a great category.
How would you, Jim? Listen, we're always looking for lines of sight into the consumer, and maybe now more than ever because we don't have all the government data we would like. So even more than ever before, I think investors look to a CEO like you. What do you see with the consumer? How healthy, how resilient?
Remember, our people are homeowners. Mm-hmm. So these are not the bottom of the economic totem pole. These are people who live in really suburban homes, and they are not suffering. They have jobs. They are interested in sort of inexpensive home projects. There's a lot of psychic benefit for gardening. Like the young woman who was the producer that had us last time we were in your show, Taylor, she's off on like maternity leave right now. Right. Like she said, I don't have, my lawn's all messed up, could you help me? The producer that just brought us in here, what are they? 2 kids, they move out to Westchester, they want a home, they want a garden, they want a yard.
Did you have advice, Jim? Were you able to give some tips and tricks?
Yeah, we sent Taylor all kinds of stuff. I sent her a note yesterday saying, dude, by the way, how was she said, the lawn was great, but we sold that house and we bought another house. Yeah. The biggest thing with it is get her on a 4-step program where she's applying regularly lawn fertilizer and she's got a great yard. It's so simple.
Here's another theme. We talk about AI a lot on the show, as you can imagine. I thought it was interesting, Jim, how you did mention here leveraging AI and robotic automation in the business. What are some examples of that, Jim? And where's it showing up in the financials, operations, margins?
Look, I think we're using AI in a lot of places in the business. I wouldn't say we're giant AI kings or queens.
The NVIDIA of lawn care?
No. Okay. Look, I think we've got great data, but it helps us sort the data. For sure, it's helped us. We picked up 500 basis points of margin in a year. A lot of that is really getting inventories much better control over sort of all our costs at Scott's. Where it's really going to come is our knowledge of the consumer. That's where AI is going to really help us. I think it's consumer insights and sorting data and really helping us make decisions. And then, frankly, try to make the company a little smaller, put more of our money against the things that drive business, which is activation dollars with retail and consumer.
Final question, remind me, do you have tariff exposure? Do you have to navigate that dynamic?
A little bit on the pot side, a little bit on plastics that we buy for spreaders. But 90% of our stuff is untariffed. And the stuff that does come in from, the biggest thing is peat moss from Canada, which is ag product and tariff-free.
Jim, always great to see you, especially on set. Thank you, sir.
Thank you.
Thank you. Now time for some of today's trending tickers. We're watching Apple, Teva Pharmaceuticals, and Axon. Starting off with Apple reportedly getting closer to its AI overhaul of Siri. Bloomberg reporting the tech giant is close to signing a deal with Google where Apple would pay $1 billion per year for access to the technology. The hope is to rely on Google's tech until Apple has its own AI model that is as powerful. The report saying that Google's technology will help set the stage for new Siri features. Up next, got Teva Pharmaceuticals that's also reporting a beat and raise in its third quarter results. That stock hitting its highest level since 2018 as the company's push into branded pharmaceuticals helped drive the results. Most of the company's sales come from generic drugs, remember, which did miss expectations. And finally, Axon sliding more than 20% on the day as tariffs hit that company, which makes tasers, body cameras, and drones. Company's third quarter earnings did miss expectations while revenue beat. Axon also announcing a deal. It's acquiring emergency communications firm Carbine in a deal that values that company at $625 million. The stock trading off the worst levels of the day as the Supreme Court casts some doubt on the legality of President Trump's tariff policy. Coming up, we have the closing bell on Wall Street and a slew of earnings. Stick with us. That's Close the Bell on Wall Street, and now it's Market Domination Overtime. We are giving you full coverage of all the moves to get you up to speed on the action from today's trade. Yahoo Finance's Inez Frey joining us now with the very latest market action. Inez.
Josh, we've ended in the green for all three major averages, though off the highs of the session, but nonetheless, the Dow up 0.5%, the NASDAQ Composite up 0.7%. It had been up as much as 1% during the session, and the S&P 500 up 0.4%. Looking at the U.S. dollar index, well, let's take a look first at the 10-year Treasury note. That did move up to 4.16%, but looking at the U.S. dollar index, that has been relatively unchanged, or just down slightly. That's supportive of equities. Taking a look under the hood, we have been seeing in the sector action, consumer discretionary, materials, communication services, those have been the leaders throughout the session. Over on the NASDAQ 100, you'll see a mixed picture for the Mag 7, but Alphabet up 2%. Tesla up 4%, rebounding ahead of its important shareholder vote tomorrow. And also Nvidia down, Microsoft down as well. But the chip space really seeing a rebound today. You have AMD that's up 2.5% for the session. Micron, Intel also higher, and Broadcom higher as well. I want to take a look at the crypto space because that had been rolling over, but today we are seeing a bit of a rebound for crypto. Bitcoin up 0.3% at 103,000. Remember that yesterday we saw Bitcoin briefly going below the $100,000 level. You have Ether also up 7% as well, and also the crypto-related stocks. Those today have been in the green for most of these stocks, and we are going to be expecting today a Robinhood results after the bell. Josh?
Thank you, Inez. Let's turn now to Qualcomm as its fourth quarter results are just hitting the wire. Let's look at the numbers here. Q4, adjusted EPS, $3. The street was at $2.88, so that's a beat on the bottom line. Looking at the top line, Q4 revenue clocks in at $11.27 billion. The street was closer to $10.77 billion, so that is also a beat. Now let's get to the forecast. Q1 EPS, they're calling for between $3.30 to $3.50. The street was at $3.26. And it looks like Q1 revenue, they're guiding for between 11.8 to 12.6 billion. The street was closer to 11.59 billion. I do see here a full year CapEx guide as well. It looks like they're 1.19 billion. That's a bit higher. It looks like consensus was at 1.18 billion. Just initially here, at least, we're dipping here about 2%. Of course, we track Qualcomm so carefully because it is the largest maker of smartphone processors. Of course, they've been eyeing opportunity in a lot of different markets, PCs, auto, and yes, making their move in that AI data center market as well, taking on NVIDIA. Well, for more on Qualcomm's latest quarter results, let's get to it. We got just the man to walk us through. That would be Futurum CEO Daniel Newman here on set. Daniel, the numbers are just out. At least initially, we saw a dip down about 2%. I'm curious to get your take. What do you make of these results?
Hey, Josh, the numbers came out pretty tidy. What was it? A beat on revenue, beat on earnings, beat on guide. You got to like that. I mean, this is a company that's in transition. They are trying to tell a new story. They've had some really good success in automotive. They've expanded their business into IoT. The core business has been somewhat rate limited, but what I believe they're showing here is that it's stable. They had the Apple revenues falling off over time, and they've had to prove their wares there. But overall, I like the numbers. And by the way, I've been calling this company a dark horse for a while. You've got that data center upside. You've got the automotive business. You've got IoT. Like I said, the core business is stable. I like the company because it trades at like 14, 15 times forward with all that potential. And I think their story is more of a 6 to 8 quarters into the future story.
I want to get to the AI part of the story, but first, just the bread and butter. The company does generate most of its revenue from smartphone chips. So I'm curious, Dan, as you look ahead to 2026, you look at that smartphone market, what does it look like? What does device growth look like to you?
Well, I think we've seen to some extent that these numbers continue to sort of grow steadily but slowly. We saw it just last quarter with Apple, the iPhone 17 excitement, all the enthusiasm about that at the top end, which is where Qualcomm really does its best work, in those very high-end devices for Samsung and others. That's where we're starting to see growth, and that's where a lot of that AI enthusiasm and excitement exists. And I think Qualcomm's done a good job protecting margins, winning at the high end, and that's where I think they need to win while they're in this process of diversifying. But to your point, most of their revenue, yes, but their diversification is becoming more and more. A mid-double-digit percentage of their business is now diversified away from the smartphone.
Apple switching to in-house modems. If I'm a Qualcomm investor, how should I think about that?
They've been telling this story for years. They've already baked it into the numbers. This company, with their model over the next 3 or 4 years, I spent some time with their CFO today talking a little bit about this, just the reminder of this. They have been very upfront about this, but like I said, look at the number. They're beating, they're raising above the consensus midpoint. But here's the thing, Josh. They came out, they announced that AI chip.
Yep.
And you saw it just flew, right? Didn't it? It went up to like 20% at some point in that day.
That got investors excited.
It came back down, but the company understands they need to be in physical AI. I think they're going to enter into robotics. I think they're going to, see this IoT number expand. Automotive, $45 billion plus pipeline. AI chips, they only need to win like 1% of market over 4 or 5 years to add $6 or $7 billion we're estimating to their top line.
Do you think, so they make this move into the AI data center market. How successful, Dan, do you think they're going to be in attracting customers, convincing customers, hey, come with us, not NVIDIA, not AMD?
Well, I think part of the problem is that everyone wants to make that comparison. I think there is going to be a market that expands beyond NVIDIA and beyond AMD. I think that's where companies like Qualcomm have a really great opportunity to shine. I think you have to consider just the inference opportunity. Qualcomm was pretty specific that they plan to specialize in that, they're going to take advantage of a lot of intellectual property. They're known for like low power, efficient at the edge. They're going to bring that to the data center. They won Humane. That was the company they announced 200 megawatt deal. It's a start. I think they'll win 1 or 2 more hyperscale customers.
You think a few more big cloud giants?
Yeah, they may not be massive deals. They may win small deals, get into the door. But like I said, if you look at a TAM, and these numbers, Josh, you keep hearing different numbers. We had a $583 billion number last quarter. We expect to raise that number again by 2029. And if they win 1, 2, 3%, you're talking $5 to $15 billion of incremental to Qualcomm. That's a quarter of revenue potentially being added that could take the company and, by the way, push that multiple, that 13, 14 forward that they've been getting for the longest time. If they even got to 20, that's a lot of upside for an investor.
All right. Well, listen, we got another earnings alert. Stick with us, Dan, because Arm has just crossed the wire. Let's get right to Yahoo Finance tech editor. That would be Dan Howley in the newsroom with the results. Dan.
Yeah, Josh, we have earnings per share of 39 cents. That beats on estimates of 33 cents a share. And revenue came in at $1.14 billion. That also beats with versus $1.06 billion. They also beat on the Q3 outlook. So originally, the estimate was for $1.11 billion. Arm says that Q3 revenue will be $1.18 to $1.28 billion, and now we're seeing shares rip higher. They're up, they were up about 5%, but now they're coming back down to earth, less than 1%. Obviously, Arm huge because they provide the designs for everything from chips that go into the iPhone to Qualcomm, which you guys were just discussing, and all over the place. NVIDIA, they use ARM chips or ARM designs for their chips as well. So a huge indicator of where the chip industry is going. They make all their money from licenses and royalties.
All right, thank you, Dan. All right, so Dan Newman, this is a bullish forecast versus expectations. What do you make of that print?
Are we not happy as tech people that pretty much we're beating every number? I mean, I know yesterday was Armageddon and it was the end of the world for AI. This is just another breadcrumb. I mean, first of all, company that provides the CPU technology to every Blackwell. We heard last week Jensen Huang at GTC, you and I talked about it, $500 billion of visibility by the end of next year. Their royalty numbers are through the roof. I spent some time talking to Renee Haas. The words I'm hearing are things like insatiable demand, unprecedented demand. And by the way, I've had conversations, another company printed today, Coherent. I mean, they're in the business with the materials, transceivers for AI. Everything around AI, Josh, has unbelievable demand. Arm is one of those companies that has an entree coming They've sort of laid these breadcrumbs. They're going to get into AI chips. They've gotten into these custom and subsystem designs now. That's shot their margins up. I mean, this company's almost twice the size that it was when it went public. And they haven't really even fully gotten into AI yet. You've got to like the fact that everything in AI and everything in tech has performed so well this quarter, and Arm is just another one that is coming along and doing really, really well as this tech boom continues.
Who is their big, what would be the competitive risk for Arm? Would it be is it that RISC-V chip architecture, Dan? Is that it?
Well, of course, as Arm gets into more things, right? As Arm decides to say, are we going to start doing more, going down that path of designing, helping with AI chips? We know there was a little tension with NVIDIA that came out after some of those announcements had broken. NVIDIA starting to partner with, potentially they did the deal with Intel. All those things could create some level of risk for Arm. But I think Arm is so deeply embedded in so many markets. Remember, they're in data center. They're in edge and IoT. They're in all the lightweight sensing devices for consumer IoT and wearable devices. They have that partnership with Meta with their smart glasses. They're in everything. So they're so deeply embedded. But like everything, like the rise of Arm itself, there's always the next thing to rise. And of course, you mentioned RISC-V. That's one of the technologies that's, of course, being looked at as a possible competitor in time. But that'll take some time to develop.
You think about Arm, I mean, the instinct is obviously think smartphones, but they've been making these moves into PC, into data center. How much success, how much traction have they been having in those efforts, Dan?
Well, data center is a great example. They've partnered with Google, the Axion chip, the custom chip that Google's using. That's all Arm. I believe the numbers around Amazon for AWS Graviton came out something around 50% now of all of AWS of their workloads now are on Graviton, which are ARM-based instances. We've seen it in PCs. We've seen that pivot to ARM. We know Apple uses a ton of ARM architecture. So you're seeing it in data center. You're seeing it on PCs. You're seeing it on devices. It's really found its way into every part of the market. So it's very interesting if ARM gets deeper into AI, how much that could drive their TAM up. And you're seeing it with Qualcomm, you're seeing it with Arm. They all see this opportunity, and this TAM is getting to be so large that winning even very small amounts of the market gives these companies huge opportunities. You're talking about a $5 billion a year company in Arm. AI could take it easily to having 10, even if it just wins the smallest share.
Stock popping there in the after hours. Dan, thank you, as always, for that instant analysis, my friend. Appreciate it.
Great to be with you.
Meanwhile, Robinhood's third quarter earnings, they are just now crossing the wire. Let's get you those results. Stock slipping a bit here, about 2.5%. So it looks like Q3 EPS clocks in at 61 cents. I do not see a clean compare there just yet. I'm looking for revenue. There it is, 1.27 billion. Consensus was at 1.21 billion. Adjusted EBITDA for Q3, that looks like a beat, 742 million. Expectations closer to 727 million. By segment, crypto revenue, that came in at 268 million. That's versus consensus of 287.2 million there. Looking for some change in the C-suite as well. Jason Warnick is announcing his intention to retire. They are naming Shiv Verma as the next CFO. They are not providing, it looks like, a 2025 outlook for total operating expenses. Initial dip right here, of course, remember that this stock has been just a rocket ship. It had tremendous growth this year. Obviously a platform well known for trading stocks, for trading cryptocurrencies, among other assets, but it has been a winner. I mean, heading into this print, this one was up 270% this year, heading into this report, giving back, at least initially here, 3% down the after hours. Coming up, we're gonna have analyst reaction to Robinhood's earnings print on the other side of the break. Stick with us. Robinhood, third quarter earnings crossed the wire just moments ago. For more reaction, I want to bring in here Christian Bolu, senior analyst at Autonomous Research. Christian, good to see you. So the report hits the wires, at least initially, Christian, investors selling this one off. We're down about 4%, but I'm interested to get your reaction to the results. What do you make of them?
Yeah, it just hit, and Josh, thanks for having me on. Look, I think it's a pretty solid print here. Look, I think the context obviously is stocks rallied quite significantly yet to date. Expectations are very, very high on this one. But if you look at all the sort of numbers that investors tend to really care about, obviously top and bottom line beat, And it seems like very strong acceleration of net deposits, which is sort of your core measure of organic growth in September, one of the strongest months for that. So I think all in very good. But, again, to my point here, high expectations, some news about the CFO retiring, and we can talk about that if you want. Maybe all that's playing into some quick initial slowdown in the stock here.
Yeah, to your point, Christian, I mean, this one was a rocket ship. It was up about 270% year to date heading into the print. As they move beyond sort of the bread and butter trading, Christian, into other avenues, other opportunities, the prediction markets, the global prediction markets is one that's gotten a lot of attention. I'm curious, as an analyst covering the name, what kind of opportunity you think that could create for Robinhood looking ahead?
I think it's pretty significant on a number of fronts. One is diversification away from trading type activities in terms of the volatility around trading. So prediction markets, a lot of that is sports related, has a completely different activity cycle from trading. So ultimately makes the company much more diversified, which in theory should make it a more valuable earning stream over time. And then from a revenue perspective, it could be very significant. Just look at Robinhood versus traditional sports betting businesses. The business today is quite small in prediction markets. So just on that alone, you should see a ton of growth. But ultimately, prediction markets can be a lot bigger than that. Predictions on politics, predictions around company fundamentals, macroeconomic outlook. All these things are very new markets, potentially huge markets, especially if institutional money comes into the space. So I think this could be a very big business for Robinhood over time.
Should I make anything as an investor about the crypto business here? It did jump, but it missed consensus, Christian. Anything to see there?
Crypto has been a little bit soft, and we're coming off, a pretty strong period of growth. So we'd have to dig into numbers a little bit more to see if there's anything in particular. From what I can see, my sense here is just a softer market for retail, given prices are a little bit weaker. Remember, retail crypto engagement tends to be very driven by crypto prices. And obviously Robinhood is very levered to retail crypto.
I know, Christian, you did meet with Robinhood management. I'm just curious, what did you learn there?
Quite a bit. So we met with the entire management team. We were out there in the West Coast to see their management team, and I think pretty impressive management team. Obviously, a lot has been talked about, things like the growth in the business, their innovation, et cetera, all very well known. But I think what I came away with is just how disciplined an organization they are, how repeatable their innovation is, the strength of the technology stack. These things drive, I think, much more sustainable growth going forward. And my takeaway is that this is not just a meme stock trading company. This is a real business with a very disciplined management team that knows how to drive consistent innovation in a very disciplined way from an expense perspective. And you'll see that in the results, whether it's top line growth, expense discipline, margin expansion. All these things are showing sort of the company to be really maturing here as they grow.
Final question, Christian. This one is trading here at around 65 times forward earnings. I know you're bullish on the name, so I'm just curious how you think about valuation.
Yeah, it's a really good question. This one is very, very highly valued. We think about it in two pieces. We sort of value the business as is today. If we assume what typically happens, slowdown in growth over time and things like that, would value that company about $120 per share. And then we have more of a bull case scenario where we sort of like assume much more growth in prediction markets, much more market share growth in crypto, growing their investment business to be much more levered to long-term investors. And you put that all together, and we think the business could be worth something like $300 a share. We put a 25% probability on that, and if you blend those two things out, you get more like $170. So, I think pick your poison, like pick the way you want to analyze it. If you can looking at the business today, about $120. If you want to look at the bull case, we think is near 300.
Christian, appreciate your time, that instant analysis. Thank you, sir.
You're welcome.
And for more on Robinhood's business, be sure to tune into Yahoo Finance's Invest event. That's on November 13th. Robinhood CEO Vlad Tenev is one of our key speakers on that big day. Plus, we have a slew of other heavy hitters on that docket, including Reddit co-founder Alexis Ohanian, Strategy Executive Chair Michael Saylor, former Director of the National Economic Council Lair Brainerd, and Palantir CEO Alex Karp. Save that date. It's an event you can't afford to miss. Well, shares of AppLovin are rising on the heels of third quarter earnings. That company reporting earnings per share of $2.45, topping expectations, and revenue coming in at $1.41 billion, also beating estimates. Joining now, we have Alicia Reese, Wedbush Senior Vice President. Alicia, great to see you. So AppLovin reports, at least initially here, that stock's popping about 2.5% in the after hours. Interested to get your take. What do you make of the print, Alicia?
Yeah, it was above our expectations, above street, buy side, both on revenue and EBITDA. More importantly, the guide was really strong. Our expectation was 1.57. They printed 1.57 to 1.6. The street was 1.53, and I think buy side was around 1.55. So everyone's expectations were beat. It wasn't a massive beat, so you'll see, shares aren't trading up massively, but they didn't. The print wasn't very, information heavy. So I think we'll hear a lot more on the conference call. I think just bottom line, you have a lot of really interesting growth drivers coming up. So expect them to talk about the e-commerce, international. And lots of other opportunities they have here.
What are those opportunities, Alicia? Spell them out for us.
Yeah, so they have the e-commerce that they launched in the quarter and that they're growing steadily. They have a lot to do there. On October 1st, they launched the self-serve tool, so that could be a really nice growth driver for Q4. Late in Q3, they launched internationally. So these are all the near-term growth drivers right now. They have Q4 early next year through next year to really expand on the e-commerce opportunity. And then thereafter, I think they'll really start digging into connected TV, which they see as, the real whale opportunity for them down the road.
There are some, potential regulatory concerns here, Alicia, with this SEC probe. I'm curious, how do you think investors should think through that?
Yeah, so what I think is going on is there's a little bit of gray area around fingerprinting. And it's reasonable to launch this probe. It's reasonable to really look into it. I don't think AppLovin has done anything nefarious or illegal, but I think there could be a little bit of gray area that needs some probing and perhaps some additional regulation so that everybody knows the rules and abides by them. I think that will remove the overhang on the shares and on its future growth. I think there will be a lot of growth potential beyond that.
Alicia, this stock has had a run. I mean, it was up nearly 90% this year heading into this print. It's higher still right now in the after hours. What about valuation? Alicia, it looks like it's trading at around 52 times future earnings, but you must believe it's still attractively valued here.
Yeah, it doesn't really have any true comparisons right now. Unity is in the same business and is doing remarkably well. Neither has to take market share from the other to grow. It's just a massively growing market. And as AppLovin heads into e-commerce and expands performance marketing into connected TV, the sky's the limit, really. I mean, I think that market is so untapped and there's so much potential within it. And interactive ads and, SMBs and connected TV and click-throughs, there's just so much potential there. So I wouldn't put this on hold anytime soon.
Alicia, great to have you on the show today. Thanks so much. Appreciate it. That's going to do it for today's Market Domination Overtime. Be sure to come back tomorrow at 3 p.m. Eastern for all of your coverage leading up to and after the closing bell, but don't go anywhere. On the other side of the break, it's Asking for a Trend, and I've got you covered for the next half hour. The latest and greatest market-moving stories. Stay tuned.